So on Friday, we had this nice area marked up in our trading club. Price reacted perfectly in this zone. Now, the question is going to be, what is going to happen with the Sunday gap due to the attacks that happened over the last 24 hours between Iran and Israel? We're going to be breaking that down on this video. Okay, so just one of the latest reports by Reuters over the last few hours of recording this video, we are probably going to see oil gap up after the attacks, and further price is probably going to depend on the response from both Israel and possibly any type of interaction from the United States as well. So we've got to take that into account, because we normally in our trading group, we get on live at 6 o'clock and we jump into these gaps. If they're 50 points or more, they usually close within 24 hours. This is one gap that I'm going to be much more hesitant on because we're probably going to see price run away from the entry price, and they may not close necessarily as quickly as usual. So we're going to use a lot of caution. If you're in the trading group, don't worry, we will be in there together live. So let's go ahead and get into our chart here, and let me bring that up on the screen. And what I want to do in this video is I want to give you definitely the opportunity to look at zones, and I want to prepare you for the week with zones, but understanding that these zones, they usually hold up in times like this. What I'm more concerned about is going to be if we have a large gap, where and how quickly is that gap going to close. So I'm going to give you zones in this video that I want you to follow. Pause the video if you need to, mark up your zones. And again, if you're in the trading group, we will be on live to discuss this inside of our group. If you haven't joined our group yet, head down to the website that you see below, theprofessortrades.com, and we would love to have you join our group of both Forex and futures traders as well. So let's jump into the daily chart. We're going to start with the daily chart. We're going to mark up, first of all, our playing field, and this is the levels. Okay, so we've been up to this 87.60 a couple of times, and we have not been able to close below this 84.58. So you can see right here on this daily chart that we are kind of in this small consolidation area. And when I say small, because relatively, 200 to 300 pips on a daily, especially on crude oil, is going to be a very small area. We saw what happened here before. We were here and we were here, and then eventually we broke out. Okay, so that is kind of what happened here. It is what happened here. So now we're going to wait to see where the next breakout is. And again, there's a lot of speculation, even though we trade what we see, that crude oil is going to visit $90 or higher. This open could get us there. Okay, if they want to push the price that far high because of any threats in the region, then we may just see an open up in this area, but we will talk about that as we move forward in the video. Okay, so we are going to now drop down to our 8-hour chart, and we're going to just start looking at the price action. Price action is king. And again, this was the area that rejected nicely on 3 different occasions. We had some nice sells during the course of the last couple of weeks from this area, and vice versa. We were taking buys in our trading group from this area right in here. So until proven otherwise, we traded what we saw in the charts. We blocked out the noise and we stuck to support and resistance, and we use a couple of other things that we privately talk about in our club as well. So this is the playing area, right? Regardless of what is going on internationally, we have to get into a mindset of trading what we see and not what we think is going to happen. We're going to be getting to the Sunday gap scenarios here in just a minute, but we're laying the ground floor for our key areas of support and resistance based on higher time frames. That's the majority of what we do. And then we add Fibonacci levels. Okay, but again, Fibonacci levels will hold off probably until the markets open and settle over the first 24 to 48 hours. So as we dive back into the chart, this is going to be our playing field. So again, I want to invite you at this particular moment, if you don't have these levels marked up, super simple, hit the pause button on the video, mark up these white lines as your key areas of support and resistance, both to the top side and the bottom side, so you have the level playing field that we are using throughout the course of this particular week. So as we get back into the full chart mode, this was the price action on the 8-hour time frame. Okay. Now, this sell right here is a very interesting sell, and why that sell happened late in the day. You would assume that based on there was already attacks preeminent, warnings preeminent, that would have driven the price of crude oil up. So that makes you wonder if that sell off on Friday was to bring price to a lower price point so the big players can get in much cheaper because they knew that we were going to drive price up much higher for a Sunday market open gap, right? So it makes you wonder as to why would you sell off both gold, which is a safe haven, and crude oil on a Friday when war was imminent and attacks were imminent over the region. So again, just makes you want to think about what the big players are doing in this space. Regardless, this is our price action on the 8-hour, and here was our price action on the 4-hour. So as we drop back down to the 1-hour, let's take a look and let's begin to mark up some of these areas here that we want to look at. So I'm going to extend this chart here. Okay, I'm going to extend this chart here. And the first thing I want to do is I want to label this price right here. So this gap is basically this price here, which closed on this chart, okay, at the 85.40. Now, again, if you're a futures trading, you should be referring to your CL chart, okay? So in my futures account, obviously I use the CL chart, and where that price point closed, then that's going to be the equivalent of your gap as well. If you're trading on the Forex side, then you're focused in on the Forex price, whether on this chart or on your broker's chart. So that is going to be our gap. Now, I'm going to give you two major levels, one being this bottom side one, which is 83. And then I've given you, okay, this 90 for now. Okay, we are talking about a $5 difference depending on where price gaps up. So here's the scenarios that we're going to follow. So make sure that you kind of follow along here and just listen to the strategies that I plan to employ during this possible huge gap opportunity within crude oil. Typically, what happens is, and for those of you that don't know, okay, the gap is nothing more than where price closes on Friday. And let's say that price opens up here for Sunday market open, right? The price between here and here is obviously called the gap. Okay, there's a gap in price that was created from market close to market open. Okay, now vice versa, if whatever reason we gap lower first, which might be a strategy that they use, then same thing. The price closed here, right? And opens here. The difference of price there is the gap. Okay. So, how we normally trade the gap, let me get rid of this line, inside of our group is we look for at least 50 points or more. Now, understanding if you've never traded the gap, understand that gaps typically on crude oil will close within 24 hours. But this is probably not going to be a typical crude oil gap closure. So we are going to treat this a little bit differently. We are going to look for at least $1 or $2 price difference. We are going to go in at your smallest lot size possible based on the risk that you're willing to take. If you're on futures, I will trade gaps with mini lots. If I'm on the Forex side as well, because I trade them both, I trade them with less than 0.5% risk for every entry. And we will begin to look at these entries because this is typically what happens with crude oil. We get a price, let's say, to open up higher. Okay. And I'm going to make this candle red. And usually what happens is price for the first few hours takes off. Okay. So if you get in here, right when market opens, right, you could be getting a position that could have been a lot better had you maybe just waited 30 minutes to an hour while price moves away. You're better to sell higher than to sell from here. So especially on this Sunday, we're not going to take the gap right when market opens, even if it's $1 or $2 higher. We'll see if it runs a little higher, and then you can make a determination. And again, we'll be live to kind of guide you on this process for this Sunday. Okay. But typically, price opens, runs away to a major level of, in this case, resistance. And then we begin to see price settle in there. And then eventually, price during London or the next US session comes back and closes on this up scenario. Vice versa on the bottom, opens down here, comes to levels of support, and then eventually comes back up to close the gap. Now, excuse me. So in this particular case, right, we're going to let price, we're assuming it's going to go higher. We're going to let price run. If it breaks through our first level, then we look to sell at higher levels. Position number one, and we go from there. Okay. If there's any further major developments or attacks or news between now and market open, then that will change our perspective to maybe run even higher, maybe 8-10 points higher before we begin any type of first position sell entries to swing back down for gap closure. This could be an actual situation that we could see $100, depending if anything major happens. Okay, so we don't want to get in too early, and we can't have the fear of missing out, because this would be a tremendous opportunity, but you've got to understand how to play it. You got to understand that lot size will mean everything, and you don't want to risk your account over one trade because you're guessing, or we're guessing, the gap's going to close. We know these gaps typically close, but again, this Sunday it's going to be extremely unique, especially if it pops up 5, 6, 7 points higher. It's not going to close within 24 or 48 hours in most cases. It'll probably run higher, and then when things settle in, we can begin to see that closure. And again, you know what the best case scenario is? If you feel uncertain, you just don't trade the gap, right? You let gaps close, and we kind of wait till the market settle, and then we trade like normal. So that always is a distinct possibility. Now, if the gaps close, or I'm sorry, open to the bottom side, okay, and actually that candle should have been red. Let me go back and make this candle green for the buy. So if we close on this scenario right here, where we gap below, we look for major support. If it runs away, and then we enter, and then eventually price comes back up to close the gap. Okay. So we're sitting on scenario 1 and 2. Okay. We've given you parameters as to what may or may not happen. So again, this is why, I truly believe when you are inside of a trading community, it makes it much easier, because not only do you receive guidance and support, but you've got over 180 traders who are in the group, not only cheering you on, but sharing charts. And we've got, Elliott Wave folks in there who are sharing their charts. We do see some Elliott Wave theories pushing crude oil above 90 towards that 100 mark. And again, we're sharing all that information as well. So if you haven't yet done so, I encourage you to go down below. And again, check out the website that is streaming down below on the ticker there. Join us at theprofessortrades.com. We love to have you. You can choose a monthly plan. You can choose an annual plan. It is less than $1 a day. You're going to get support, learning articles, guidance, free training, free coaching, all that for the price of a cup of coffee per day. My goal is to give back to people who are just learning this craft or want to get better at this craft. From all the years that I've done this, I want to be able to pay it forward. I want the price point always to be affordable, no matter where you are in the world. And I think we've done that, and why we have a 92.5% retention rate in our group. Okay, so that's it for today's training. If you got some value, hit the like button. We will be in the group. We trade live 3 to 4 days in the group as well, not on YouTube. So if you want the live trading as well, if you want trade alerts for Forex, for futures as well, you can find that as well inside of our trading group. Have a great weekend. Use caution for any major gaps. Have a great week trading. If you have any questions, drop it down below in the comments. And if you're brand new, subscribe and turn on your notifications so you don't miss our weekly videos. Okay. I've been on vacation, just celebrated a birthday this weekend. So thank you so much for all the birthday wishes. And we'll get back to normal operations this week. Have a great trading week.